Today I would like to talk about Nike. It's one of the biggest clothing companies in the world. And this is not only the brand Nike, they also have the brand Jordan and the brand Converse. Maybe not everybody knows that already. So the stock is trading down in the 6-month chart. It's down about 30%. It had a big drop. In the 1-year chart, it's also down 34%. And even in the 5-year chart, it's down 11%. So this could mean it's potential undervalued. So we have to take a look more in the financials to find out. So the first thing we can notice is the big market cap of 108 billion. So this is the shares outstanding multiplied with the stock price. And 108 billion is a very big company actually, especially as a clothing brand. So we have to take this in mind too, because it can mean that the bigger the company, the more difficult it is to grow. So I want to take a look at their financial foundation, and for me the first thing which is very important is the revenue growth, because we want to invest in a business that is growing and not declining over the years. So if we take a look at the revenue of Nike, we can see it did grow over the years and in a very good rate. The only time it didn't grow, it was in COVID. So that's looking quite good. It's a check here. So the next thing we are looking for is free cash flow growth. We want to have the free cash flow because this is how we pay the dividend and buy back the shares. So as we can see here, we had the 4.78 billion in 2019, yeah. And in 2020, it declined a lot because of COVID, but then it did recover, and now we are around 4.87 billion. So it's up a little bit, but not really much. So it's still a check mark here. Okay, the next thing is very important for me because it also shows the valuation of the company. We want the free cash flow yield over 4%. So how do we calculate that? We take the free cash flow. It was $4.87 billion, and we divide it with the market cap. So then we get the free cash flow yield. 1 second. So we have this number, and that's about 4.479%. And that's very good actually. I think over the last years it was way lower because the company was overvalued, and now it's at a good stage. So it's a check here, and it definitely looks interesting to investing. So the next thing is also very important. Debt to free cash flow ratio should be under 5. So what does this mean? This means that we can pay back the debt with our free cash flow in under 5 years. So we have to take a look at the debt first, and you can see here is the short-term debt and the long-term debt. So actually I would like to take this number here because this is excluded capitalized leases. So I think is a better number to use. And we also will use the short-term debt here. So how much is this? It's around, let's say, 9.3 billion. So now we divide it with the free cash flow that we already had here, 4.87. And we get the number 1.9. So this means in under 2 years we can pay back the debt with our free cash flow, and this is really good. So it's a check here too. But I also want to take a look at the cash on hand. This is how much cash they have on the bank. So it's actually over 10 billion. So they have a lot of money in the bank. So this is already covering the debt. So they're looking really good in the financial way. So the last thing we are looking for is shares outstanding decrease. This means that the company buys back their own stock. this can be good, especially if the company is undervalued. And right now I feel like Nike is undervalued. So as we can see, since 2022, they did buy back shares. And this is a good number. It's a little bit over 1%, a little bit over 2%. So it's a good number, and it's definitely a check here as well. So I want to give a quick conclusion about Nike. So the first thing, the financials are really great. So we're looking at a company with great financials, which is really looking interesting. But we also have to think about the competition. So Nike has a very high competition right now. There are many new brands on the market. I think this brand is quite new on, and they make good shoes as well. And there are different shoes brands that coming on the market right now. And of course, we have many old brands as well that still are definitely taking market share of Nike. So the competition is definitely high. And also we have Chinese brands that are also getting more popular in China. So this is a big market for Nike, and they cannot really afford to lose this market. But what I also realized that we have more bad reviews. So I heard more that people are not happy with the quality of Nike anymore, that the quality is getting worse. So this is also a concern. If they cannot keep the quality up, then people will not like to buy Nike anymore. So there are definitely concerns about Nike. I think it can be a good opportunity, but the company also need to doing the things better and improve certain aspects of their business. So I hope you liked the video, and please don't forget to subscribe and like the video.